I want to take some time and talk about the misconception with the VA home loan and the no money down and closing costs and what the expectation is for the borrower. What do they need to have, or what do they need to think about when it comes to how much money this is going to cost? My name is Drew Smith. I'm a licensed loan officer. I specialize in VA loans. I talk with VA borrowers all day, every day. I love it. It's the favorite part of my job, is actually sitting down, talking with the borrowers and going over everything. Now, a lot of times what comes up is when we start talking about how much this is going to cost, the veteran always says, or a lot of times says, not always, excuse me, a lot of times says, well, hey, wait. I thought this was 100% financing. I thought I didn't have to pay any money out of pocket for this. So the misconception is, and it's of course the headline, it's the fun thing that we all want to advertise, right? Oh, zero money down, 100% financing. And that's not necessarily a lie or misleading, but what it does do is it creates confusion because it doesn't say except for the closing costs. So when you're looking at a loan, you've got conventional FHA. So a conventional loan, you're going to be at least 5% down. Sometimes you can do 3% down depending on the product. There's certain products out there that you can do 3% down on conventional. FHA, 3.5%, sometimes 10% down depending on credit score and things like that. So right there, that can be tens of thousands of dollars depending on the home that you're looking at purchasing. However, with a VA loan, you don't have to do that. No money down, no mortgage insurance, so that's awesome. But we've got something else when it comes to the loan, and that is closing costs. Those are separate from the down payment. So there's no money down on VA, but you have to pay for your closing costs. Your closing costs are things like your escrow account, all right? That's your property taxes and homeowners insurance. You're also going to have any state recording fees, third-party fees like title. You're probably going to want to get an inspection. There's going to need to be an appraisal. Then you'll have your lender fees like processing and underwriting, and all of that can add up to thousands of dollars. And I didn't even mention your earnest money. So when you look at purchasing a home, the seller of the home agrees to sell you this house, but they want some proof that you're really interested and you're serious about buying that home, and this is called earnest money. It's typically 1% of the purchase price. So if you're looking at a $300,000 home, they will typically ask for $3,000 in earnest money. So that money doesn't go directly to the seller. It goes to the title company and they hold on to it. And that goes towards your closing costs, but it's essentially a down payment that you're putting in on the home to tell the seller of the home that you're serious. Now don't worry, it's not lost money if the deal doesn't go through. Throughout the purchase contract, there are different stages where if you decide to back out of the contract, you can do so and still take your earnest money with you. But that's all cost, and so you need to know that there are going to be costs associated with getting a VA loan, even though it is 100% financing. Typically what we can do is we can work with you, depending on the market that we're in. We can talk to the real estate agent and say, hey, can we put this thing together, and ask for seller concessions. That's where you ask the seller of the home, the current owner of the home, to give you money back at closing to cover those closing costs. Hey, Pupperdo. So that's a little bit about closing costs and things that you need to know. If you've got more questions about it, please feel free to reach out to me. My name is Drew Smith. Like and follow for more mortgage tips.